Joining us right now, Larry Kudlow from CNBC. Good morning, Larry.
Morning.
So we've been talking a lot about these unbelievable demonstrations in Egypt. Millions and millions of people taking to the streets in Tahrir Square asking for change. Of course, all the unrest in Syria and the U.S.'s involvement there. We've got a regime change over in Iran. We have unrest in Istanbul. All of these things cobbled together. The first thing you think of in the business world is oil. What's going on with the cost of oil?
A little, not much, a little. I mean, it has crept up a little bit. Couple of dollars. I'm looking this morning. It's West Texas crude is 98.31. I don't have a quote for Brent crude, but it'll be a couple bucks higher. I think Brent crude closed at 102 yesterday. A little bit. Egypt's not an oil producer, not really, and none of this affects Saudi Arabia, which, by the way, doesn't like Morsi. And
but there's no issue in terms of the Suez Canal and the safe passage of oil and
the region as a whole.
I doubt it. I just don't see it. You know, it's funny. Oil politics have really changed since the fracking revolution here in the USA. Very interesting. And the price swings that would come out of the Middle East normally might have a bigger hit, but it's not as important as it used to be. Now, if you close down the Suez, you'll get a bigger hit. Brent crude's about $102. You'll get a bigger hit, but not much. I just don't see it, and I think you'll find the Saudis will put more oil onto the market right away in order to stabilize prices, because with a weak world economy, they don't want prices to skyrocket. They're not going to be able to sell anything. So I don't see this. Look, this is a political issue, okay? This is a Muslim Brotherhood issue. This is a Sharia law issue. This is an anti-democratic issue. This is an issue that we never should have backed Morsi in the first place, and we shouldn't be selling him weapons and giving him money and things of that sort. This is a political issue, and how that's going to play out is going to be very interesting, because I mean, it kind of looks like the military is going to step in a very big way. How big, I don't know yet, but in a very, very big way. So I see this more in terms of politics than oil.
All right, so let's talk about closer to home, Wall Street. Would it be safe to say we've seen some volatility of late? I mean, up and down, up and down. So what's your view of the street today?
You know, the stuff I've been thinking and writing is investors beware. Investors beware, because you're right about the volatility. You're in the early throes of a major change in Fed policy. That's my take. The Fed is going to pump fewer dollars into the economy. They're going to buy fewer bonds. That's going to slow the money supply down. Is this the right time to do that? I actually don't think so. With gold prices crashing and commodity prices falling, I think there's a whiff of deflation in the air. So what am I saying? I think the Fed has to, at some point, stop QE. They have to. You can't just keep doing this. You can't be manipulating the market. You can't be manipulating risk in stock and bond markets. Yes, they've got to stop. Is this the right time to stop? I'm not 100% sure of that. That's my problem, and I'm a little worried that if they follow through, then you're going to see stock prices go down, bond prices are going to go down some more. Interest rates, which are, about 2.5% on the 10-year bond, I could see them going to 3.5% sometime between now and year-end. That's going to muck up valuations of stocks, going to reduce valuations of stocks. It makes the extra dollar of profit worth less at the higher interest rate. So investors beware. That's the best advice I can give.
Well, what do you do in a time like that when there's a lot of volatility, but you generally think, if I'm reading you correctly, the trend will be downward over time?
I think so. I don't think forever. I'm not a long-term bear, but I'm a transition bear. And I think that probably what you're going to have to do is, it doesn't make any sense, but you got to have a big cash position even though you're not paid. We had a bond expert on the Kudlow report last night. And he said basically people are selling their bonds because they've been, mauled in the last 2 months.
No kidding.
Mauled. All right. Now, stocks haven't really done much, but bonds have. Are they taking their bond money and putting it into the stock market? No. There's no evidence of that. Where's the money going? I said, well, money's going into cash. Cash doesn't pay anything. He says he knows that, but people are seeking safety right now before they can figure out their best move.
Well, but what I don't understand about that is, at times when you're seeking safety, I've always thought that gold was one of the places that you went, but it's not doing well right now.
Gold is not necessarily. Gold was the end of the world trade a couple of years ago. Now gold is back to being an inflation trade, except it isn't inflation, it's deflation. I mean, the inflation rate in the U.S. is about 1%. That's practically zero. That's not far from falling prices. So, no, I don't think gold is a good investment. I think gold could drop to $1,000 an ounce, and therefore you'd lose money there. So I would say to people, in the short run, keep your eyes open, look at all the money, the data coming in. You might want to, if you liquidate some securities, be safe. Put your money in cash. Be very safe. At some point, you're going to go back into the stock market.
Yeah.
But look, you've got two events here between now and, let's say, the middle of 2014. The Fed's going to end QE. That's going to be their policy. You probably saw Feldstein in the paper today encouraging the Fed to do that. I think they're going to do that whether the economy is booming or not. And then after that, at some point, interest rates, short-term rates, are going to start going up. So that'll give you more upward interest rate pressure. This is a very difficult time, and I'm usually an optimist about these things. I guess what I'm saying is, from a strategy standpoint, I'd be pretty cautious right now. I really would be pretty cautious right now. I mean, I happen to be long stocks. I'm not a trader. I've been long stocks through this whole period. We're not allowed to trade at CNBC, but I'm not wildly optimistic about it, that's for sure.
Sounds a little bearish, Larry Kudlow.
Yeah, I would just say keep your eyes open. I really would, and preserve
Investor
your
beware.
gains. There's nothing wrong with preserving your gains. You've been up a lot in the last few years.
All right. Larry Kudlow, host of the Kudlow Report on CNBC, and, of course, the Larry Kudlow Show right here on WMAL, Saturdays at 7 p.m.
Thanks,
Great
Larry.
to have you, Larry. Thank you.
Thanks.